Hey, what's up everyone? It's Cameron here with themoneyventure.com. Today we're going to talk about how to get started investing for beginners. A lot of beginner investors get scared up front because maybe they don't know what to do or where to start, what to invest in, how much money they need, whether they need a college degree to invest. But in short, it's really actually pretty simple, and you don't have to have a college degree. You don't need a lot of money, and it doesn't take a whole lot of time either. So we're going to cover all these subjects and show you how you can get started investing from a beginner level and go from there. So don't forget to subscribe to the channel, The Money Venture, and visit our website, themoneyventure.com. So let's get started. So one of the biggest things that new beginner investors have on their mind is probably intimidation. They don't know what investing is exactly. They know that if you put your money there, you'll get a return on it and you'll turn $1 into $1.25 or whatever it might be. But the idea scares them in how to do it, and it's really actually pretty simple. There's really two methods of investing, and the first method is called passive investing. It simply means putting your money in an investment that is diversified by nature and allows you to essentially set it and forget it. The second option is investing in individual companies or investments in general, where you have to manage them on a more regular basis. It takes a lot more time to do it, the second option, but for beginners to start, they can really start with a passive investment approach. And the second thing is you don't even need a whole lot of money to start investing when you use a passive investment approach. Let me show you how. So the first thing that you actually need to get started investing is, number one, you want to determine where you're going to invest your money. And so for the sake of this video, we're going to talk mainly about investing in stocks because it's the easiest investment for beginner investors and it doesn't take a whole lot of money to start. So the first thing that you need is an investment account. An investment account is easy to open up. It's not much different than a bank account, so don't let it intimidate you. The only difference is when you open an investment account, you then put money into it and you have options to go and log into your investment bank account and select the different investment options that you want to put your money in. That's really all the difference is. Other than that, if your money isn't invested, it's just sitting there in cash like it would in a regular bank account. An investment account is often referred to as a brokerage account, just an individual investment account. There's also retirement accounts, etc. So the first thing you need is to open up an investment account. Here's a few recommended places where I personally use and have used, and so here's a few good places to start to open up your first investment account. These investment accounts are ones that I personally recommend and personally use. The first one is Robinhood. It's a completely free investment account. You can invest anything from individual stocks, exchange traded funds even as well, without any minimum balances to open the account, or you can invest in fractional shares, so you can put $5 into a stock that costs $2,000, like Amazon, for example. In fact, they'll even give you a free share of stock if you open up your account through my link below. The next one is M1 Finance. They're also a completely free option for you. M1 Finance lets you build your own, they call them pies, build your own pie. So you can set up basically your own fund and include 10, 20 of your favorite companies into one, and just invest your money into all those companies at once as if it was another fund, but you created it. They also give you the option to invest in exchange traded funds that have already been professionally made, or like an index ETF, which is what we've been talking about here. Perhaps my favorite is Fidelity. Fidelity is an all-around great option because they have pretty much everything that any popular app out there has, as well as the knowledge and the additional tools and research tools. They don't charge any commissions. They let you invest in fractional shares if you do it through their app. They even have a robo-advisor option called Fidelity Go, so they're a great option as well. And the last one that is a little bit even more passive type of investing is doing something through a company called Acorns. Acorns lets you open up an account, answer a few questions to determine the type of investor that you are and how comfortable you are with risk. then they build a customized portfolio for you based on your answers to those questions. So you don't even have to worry about going and picking out an exchange traded fund to invest in. The reason I like them is because they allow you to link your bank account and round up every daily purchase that you make to the next dollar and invest your spare change into the Acorns account. So it makes it both automatic and easy to invest your money on a regular basis. Once you've got your investment account opened up, the next step that you need to do is figure out how much you can afford to put into your investments. The whole idea here is to pick an amount from your budget that you can deposit to your investment account on a regular basis and know for certain that you're not going to need it in the near future. If it's needed within the next year or so, it's probably best that you keep that money kept in cash. If anything, if you don't have much money at all, I promise you can find at least $5 per week to invest in. It's skipping a lunch. It's not going to the gas station for that extra Monster Energy drink. It's whatever it might be. The whole point is to get yourself in the habit of investing on a regular basis and start with something that you can afford and gradually increase it from there. Go together with determining what your budget is knowing your time horizon. The time horizon simply means how soon are you going to need that money. Again, it should be at least 12 months or longer. So if the money is being invested for a down payment on a house in the next 5 years, or a wedding or college education, whatever it might be, for sake of this video, we'll just assume that we are investing for retirement. That could be in a retirement account, or it could be in just a regular individual account. But the whole point is we're going to invest it and we're not going to touch it for at least 10 plus years. And so once you determine your time horizon, next we're going to figure out what investments we're going to put our money into. Now that you've got your time horizon figured out, we're going to actually start investing your money. And so again, for sake of this video, this is for beginner investors to start investing without having to worry about managing very much or taking a whole lot of time to manage the actual investments in and of itself. So the way that you do this is by investing in what's called an exchange traded fund, or ETF for short. An exchange traded fund is essentially a basket of a bunch of companies all comprised into one investment. So when you purchase one share of that fund, you're essentially purchasing a piece of potentially hundreds, even thousands of companies, depending on the type of fund that you invest in. Really it comes down to which exchange traded fund that you want to invest in, and then put your money there and basically set it and forget it. Now there's multiple different kinds of exchange traded funds out there. The easiest type of exchange traded fund to purchase is what's called an index exchange traded fund. An index fund is basically a fund that is comprised of a bunch of companies compiled together so that investors can measure what the stock market is doing. So for example, if we want to measure the entire stock market in general, a lot of people use what's called the S&P 500, and that is an index that's just comprised of 500 of the largest companies that trade in the United States, and they make up the majority of the stock market. I think it's just over 80% of the entire economy. And so basically how well the S&P 500 fund does can give us a pretty good idea of how well the entire stock market is doing as a whole. What's really nice about it is you can invest in an exchange traded fund that tracks the exact same companies that are included in the S&P 500 index. If you want to pick an easy way to start, then I would recommend doing the S&P 500 exchange traded fund. And here's a few options and a few companies that you can put your money into that mimic what the S&P 500 does. Each of these funds are great options to start with. Each one of them mimic the S&P 500 index, and so the biggest difference is going to be the expense ratio. Each company might have a slightly different expense ratio, which is just the fee that is charged to manage and update the fund as the S&P 500 index updates. And these expense ratios are usually like a fraction of a percent. So for example, it might be 0.002% of your account balance per year. So it's pennies on the dollar and something not to worry about too much. But other than that, they're all great options. The first one is the SPDR S&P 500 Trust. The second one is the Vanguard S&P 500, and the third one is the iShares S&P 500. Again, each of them match what the S&P 500 index is doing and are great starting points. On the left-hand side is the ticker symbol. It's the identifier used to find that company in the search engine on your brokerage account. So when you log into your brokerage account, you can type in those identifiers or ticker symbols and it will pull the company up directly so that you can buy that specific company. And when all is said and done, the number one most important thing that you can do when it comes to investing is simply getting started. That even precedes what you invest in or how much you invest. If you can simply pick an exchange traded fund or even just pick the S&P 500 and start with whatever you can, even if it's just $5, that is the most important thing. The next step is establishing the habit to invest on a regular basis and then gradually increase it and know that your money's going to stay there for the long term. And before you know it, you'll have a pile of cash sitting in your investment account and it'll make you feel even more safe financially. Once you start doing this, you'll start grasping the idea of how investing works and you'll start getting excited about it even, and you can take another step further and begin putting money in individual companies if you so wish to. For more information on how to get started investing, you can take a look at our course. It's called You Don't Have to Be an Expert to Invest in Stocks. Find it at themoneyventure.com, and up in the top right-hand corner there's a green box that says Courses. Click on that and you can see the course on that we created for beginner investors to learn more information. Other than that, we hope all is well on your end and that you're staying safe, and until next time. If you found this video helpful, please give us a thumbs up located just below the video. Don't forget to subscribe to our YouTube channel by clicking the subscribe button below to be the first ones notified about our latest content.